Hello traders, Gary Wagner here. It is 11:52 in Honolulu, 5:52 in New York on Thursday, 23rd day of June, 2022, and this is the Daily Report for Gold and Silver. In his second day of testimony to Congress, Powell made it emphatically clear that they intend to continue their policy of monetary tightening and to do that with a series of continued interest rate hikes. That, of course, affected the precious metals to the downside. We're supportive of gold. Gold futures basis the August contract is currently down $14.40 at $1,824 per ounce, and the dollar index is up about 0.2% at 104.16.
At the Fed, we understand the hardship that high inflation is causing. We are strongly committed to bringing inflation back down, and we're moving expeditiously to do so. We have both the tools we need and the resolve it will take to restore price stability on behalf of American families and businesses.
We certainly saw gold decline and decline under the 61.8% Fibonacci retracement. Of course, it has been below the 200-day moving average for the last 5 trading days. First, we did put on a trade this morning, buying August futures at $1,827.50. We placed our initial stop at $1,823.50, but a little later, we raised those stops to $1,835. We feel good that we did that, with gold now at $1,824.70, and we exited the trade at $1,835, resulting in a profit of $750 per COMEX contract. Stops were also hit in our long Forex trade as well as our GLD. You can see complete descriptions of those trades on the members page. The fact that the Federal Reserve is intent on implementing a series of continuing interest rate hikes could definitely pressure gold pricing lower. As I said, we moved below the 200-day moving average about a week ago. We've clearly taken out the 61.8% Fibonacci retracement. So if we do see a continuation in gold falling, where can we expect it to drop? Well, the first level is simply based upon this low right here. That comes in at 1805.40. That is a very realistic target for a point in which gold could drop to. If we get more severe selling pressure, I have to look at this bottom, because this matches not only this low here, but it lines up roughly with the low in February as well as a low in January. So in terms of importance, I would have to say that 1786 would be the key area should gold continue to drop. However, traders, we are looking at a monetary policy by the Federal Reserve that will last through the end of the year. It is almost a guarantee that we will see a 0.75% rate hike coming out of the next FOMC in September. Then there is a November and December. We're sitting at roughly 1.5% interest rates vis-a-vis the Fed funds rate, with their target being 3 to 3.5%, which means that a series of aggressive rate hikes could take gold to major support levels. We're looking at a weekly to ascertain what those levels could be. We looked at these short-term levels based on this recent activity here, but on a longer-term basis, as seen through a weekly chart, you can see some major support that comes in at around $1,750. Below that is not as strong, but you do get these series of lows. They come in at approximately $1,675. That's not to say that we won't find support at $1,800, but if we do not, these are the levels that we would definitely need to look at. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.